Hey guys, welcome back to my page and a brand new video analysis. Today's analysis is going to be on this AUD USD trade that I caught this week based off of the FOMC release on Wednesday. So then you can see during the week, we were actually consolidating a lot, and it was because price was obviously building up leading up to that news release. Knowing this, obviously, this is something that we always want to take advantage of because we know that major impact news is often an excuse for the institutions to inject liquidity into the markets to achieve their objectives, their institutional order flow objectives. And as far as the objective in this particular instance, there was only one major objective here, which was this institutional candle on the hourly time frame. Now then, how did I identify this as being the main objective? If you look at price action prior, you can see that structure was entirely bearish. We had lower highs and lower lows. However, it was at this point with this high over here that was taken out that we had officially broken structure on the higher time frame. So we always have to ask ourselves what led to that break of structure. And as you guys can see, we have a period of consolidation internally for about 4 hours where there were buys and sell orders before the burst that led to that break of structure. So we know that this is the institutional candle. What does that mean for us? Well, the buy orders that are inside, they're in profit. So we're not concerned with the buy orders. We are concerned with the sell orders inside that are in drawdown, right? Thousands and millions of pounds of drawdown that need mitigating, okay? And it's that mitigation process that we are going to be taking advantage of. So then with all of that in mind, knowing that the FOMC was about to come out, that is the area that I wanted to analyze. So what we're going to do is we're going to straight up analyze this particular institutional candle internally. Let's take it straight to the 3 minutes and have a look to see what we find. So then the first thing that sticks out to me is the fact that this is the lowest point of the institutional candle and it was mitigating this area here that took out this high here. Okay, next we have this next low that took out the sell to buy here and mitigated that as well. So far there is no low point of base available just yet. Then we have this little imbalance pocket here. Okay, let's see if it leads to a break of structure, and it does, right? We have this pocket of imbalance here, sell to buy, that eventually leads to a break of structure. Okay, specifically it is this particular sell to buy that leads to the break of structure. However, we also consider the fact that there is imbalance beneath. So those are two areas we need to consider. Then we have another area here, which is inside the imbalance on the higher time frame. We have this imbalance here that is created as a result of this massive sell to buy price action that took out structure when it comes to the high prior as well as highs over here as well. So then that was the next area, and then obviously the rest is history in terms of price going up. So then there are three main areas for me to take into consideration. We have this huge imbalance fill here and this sell to buy action that took out numerous highs. We then have this base, which looks to have been mitigated already, and then we have this pocket of imbalance here. So in order to not miss the trade, I decided to target this particular area. Now, my spread when it comes to AUDUSD was about a pip, so I wanted to enter on a nice whole number, 0.732, okay, and it was based off of the sell orders that are inside this particular sell to buy base, okay. And if we zoom in, you can see 228, 232 sell orders, etc. So then I entered on 0.73210, aiming to try and get the entry at 0.732. So I'm accounting for the spread as well. In terms of stop loss, I decided to place it at this particular level here to account for this particular imbalance here, as well as any potential base mitigation available there as well. And also because beneath that red line, there is literally no other areas that need to be mitigated. So I knew that this was a safe stop loss. And that gave us a total of, I believe, 9.5 pips of SL. Now then, let's see if I managed to catch that trade and in what nature that happened. So let's now click play back on the hourly time frame, and it's probably going to start consolidating as it did during the entire week, and we are going to see what happens. So then notice how when price came down here, it had the opportunity to fill in the imbalance and mitigate the institutional candle, but it didn't. It left behind an area that had to be mitigated, okay? So then what happens? As the FOMC releases, what you're going to see now is the perfect reaction, exactly how we expected, right? Price comes down, mitigates that institutional candle as we expected. It is a higher time frame POI, point of interest, therefore it's going to have a higher time frame reaction as we see, and then price then starts fluctuating around 0.737 area, okay? I decided to hold it until the next day because my long-term target was this particular pocket of imbalance here based off of this buy to sell. I knew that this would be getting filled in and I wanted to see price take out all of these highs. So let's see what happens. The following morning, it comes up and it hits the area I expected. So at that point, I took out some partials from the trade, and it was at this moment where price came down again that I started to consider a re-entry. Okay, because internally, as far as the 5 minute was concerned, we'd seen internal break of structure here, taking out this low, the low prior. So I knew that there has to be something that it is trying to achieve if it is breaking structure on the lower time frame. And the only thing that I could find present in terms of the objective of the institutions in coming back down again was this particular area here. Why? Because there was this sell to buy action that created this imbalance that led to break of structure over here, taking out these significant highs. The same was true on the higher time frame as well. So if you look specifically, when it came to this previous high, price tried to break past it. However, it rejected. It didn't have the intention at the time. When it resumed, it rejected numerous times, as you can see. And then finally, what broke it? It was this candle body closure, right? So what led to this candle body closure taking out this structure? There has to have been a base, right? And then obviously internally, you can see that base here on the 5 minute time frame. That is the base right there. Notice how for 5, 10, 15, 20 minutes, price was fluctuating, going up and down, preparing, and then boom, we took that structure out, available here. Okay, so that imbalance fill as well as that base being mitigated, that for me made sense as to why price wanted to break structure. Notice how liquidity was being built up as far as attracting the buyers, and then they take out those buyers to fulfill that objective while making money. So then, based off of that knowledge, I wanted to enter this particular trade, and I managed to get the reaction I expected. So immediately I just broke even, waited for breaks of structure internally, and then in terms of take profit, I knew that as far as the highs here, there were imbalances available. So if you actually have a look, you have this little pocket of imbalance over here, which is why I decided to take my profit at this particular number, 74065, knowing that that imbalance would get filled in and there would likely be a reaction off of that buy to sell. So then let's have a look and see where price ended up. As you can see, it started to attract a bit of liquidity with these lower time frame resistance lines, and then eventually took them out as well as taking out the high and eventually hitting the area we expected. And then the reaction, as we said, occurred as well. And so yeah, I managed to hit take profit and catch a 1 to 8 internally. In terms of stop loss, obviously I didn't have to use a large stop loss as my entry was based off of the lower time frame within an obvious trend, and the stop loss was based off of this particular sell to buy action here. So then I just put the SL beneath any potential mitigation areas. Gave myself a nice and healthy 3.5 pip SL, and then managed to catch the 1 to 8 internally as well as the 1 to 9 externally as well. So then a grand total of 1 to 17 available to us this week when it came to the AUD/USD market. I hope you guys took a lot of value from this video. Feel free to drop any questions in the comments below. And with that being said, I hope you guys have a wonderful weekend. Take care, best of luck, and peace.